Hey everybody, my name is Kyla. Welcome to my channel where I talk about the stock market and the economy amongst other things. Today we're going to talk about the UK. So I have a whole video on what happened in the UK a few weeks ago, but essentially this is an update to that. So if you want to go watch that, I have it. But also, this is important for how the Federal Reserve conducts monetary policy here in the United States. Essentially what happened a few weeks ago is the UK government came out with this really inflationary fiscal package, and they were like, isn't this awesome? Like, don't we need more inflation right now, everybody? What if we spent a bunch of money? Of course, investors were like, that's not a cool thing to do. So get yields soared, so their bonds, everyone was like, those are gross, we don't want to mess with the UK bonds. And the pound fell because people were like, your currency is gross also, like we just don't want to deal with you, UK, right now you're being annoying. The Bank of England had to step in because of this sell-off that was happening and get yields. Essentially pension funds were at risk of being margin called, they were having collateral calls, and there was a big worry that these pension funds were going to implode. If pension funds implode, that's not good, right? For the functioning of democracy, like that's not a good thing to have happen. So the Bank of England stepped in and they were like, but listen, we're going to stop this. We're not going to keep on buying bonds, everybody. Pension funds, you better get it together because we're not going to keep on doing this. Like, you need to get your stuff sorted by October 14th. Andrew Bailey, who's the governor of the Bank of England, reaffirmed that today. And he said, my message to the funds involved in all the firms is you got 3 days left now. You got to get this done. You got 3 days, guys. 3 days. We can't do QE because of the inflationary environment that we're in. And markets, of course, did not like that. Stocks here in the United States fell. Gilts soared over in the UK. Even the 10-year freaked out here. If the Bank of England goes back to tightening, like what does that really mean? They were just buying bonds. Can they go back to tightening? Like what will the demand in that market be? And also thematically, if the Bank of England goes back to tightening, yikes, right? For the idea of a central bank pivot. So that is part of the worry and sort of why things are selling off. So Bank of England Governor Andrew Bailey said the central bank will halt intervention in the bond market as planned at the end of this week. Essentially, they had to step in to save the pension funds and everything. And part of the issue there was something called LDIs, but they're leveraged financial derivatives that are tied to interest rates. So if you think about what has happened with gilt yields, is that when those are soaring and you have all these different derivatives that are tied to the value of those yields, you can imagine that the domino effect that has and the issues that it creates. And that's why the Bank of England intervened in the first place. So it's like, okay, well, why can't they just stop this? Like, why can't they just return to QT? So there's 3 main things. They had to buy more stuff, no one wants to sell, and pension funds are old fellas, to the point of they had to buy more stuff. So the Bank of England actually had to expand the scope of the emergency measures of the things that they were buying, adding inflation-linked debt to stop the fire sale dynamics that were happening in the markets. And essentially that's like pretty unprecedented. Andrew Bailey actually highlighted how unprecedented that was. That goes back to the point, if markets already like, we're not going to be soaking up anything that you're doing. If the market is already shifting yields aggressively and higher with the Bank of England in the market on the buying side, how will the market deal with an active QT program where predefined size will have to be pushed to market? So if the Bank of England all of a sudden turns to a seller as they would during QT, that would create quite a few problems. Pensions are hesitant to sell their bonds to the Bank of England. They don't want to have to buy them up again later at a higher price. They're like, well, we really do need help, but we're gonna have to buy up these bonds again another day, and we don't really want to pay that extra price. Basically, this is from an article from the Wall Street Journal. The way that the bank has structured this intervention is that they can only buy assets if people put offers into them, but nobody is putting offers in. And so essentially the pension funds are like, well, we don't really want to sell. Why would we do that if we have to buy it again later? And then the final point is old fellas. So pensions, they got to call up a bunch of people. Like, they're still operating like it's many moons ago. They're traditionally on a very, very long time horizon. They're private assets. They have forever to sit on stuff. But now they got to figure out a lot of stuff fast. And that is hard for them. And that is part of the issue too, is like they just have to move fast and they're just not accustomed to that. So they're stopping buying bonds on October 14th is the plan. The bond sales, so QT is expected to start again on October 31st. And that is also when the UK government will release a medium-term fiscal plan. So it's just kind of like, oh wow, like there's so much coming for England. Like, what is next? Because if the new fiscal plan is reactive as the previous one, there could be another big sell-off. But basically all central banks are experiencing a lot of turmoil right now. So the Fed has a mark-to-market loss on their fixed income holdings of $720 billion. The Fed is in the red right now and they're not making money, which, they're not designed to make money, but it's just something that shows how much the market has changed. We have inflation metrics on Thursday, and that'll give a lot of sense into what the Fed is doing. But basically the idea is like, if the Bank of England does end up going back to QT, that could raise a pretty high bar for pivoting, but it could also create a whole lot of chaos depending on what happens. So that is what's going on over in the UK. A lot of signals signal around the intertwining of monetary policy, markets, and fiscal policy. So thanks so much for hanging out. Thanks so much for spending time with me. If you like this video, please share it with a friend, or subscribe, or give it a little thumbs up, and I'll see you all soon. I'll actually have an interview out tomorrow morning, 8 a.m. Mountain, with Alex from Open Access. It's a super interesting interview, so make sure to tune into that, and I'll talk to y'all soon. Bye.